Steve start the show. Hey, Jamie, Steve, what's going on?
Hey, Scott, thank you very much. Steve, what's happening over there on the West Coast?
Nothing but a happy Monday, Jamie.
Yes, happy Monday to you. Happy Monday to everybody out there. Thanks, everybody, for popping in. This is the last office hours of August, so welcome, everybody. Before we get rolling here, just want to take a moment to go through the disclaimer and just let everybody know, make you all aware that all of the information that we share with you in this webinar or any of the other webinars we have coming at you on a weekly basis is for educational purposes only. Simply meaning, if you need investment advice, what to buy, when to sell it, all that good stuff, just do yourself a favor, find someone who is licensed to dispense that type of info to you, someone like a registered investment advisor or a Series 7 licensed stockbroker. Myself, Steve, Andy, we've just been in the biz a long time, and we're just trying to show you guys some interesting things in the trading world. So if you do need that investment advice, seek out a licensed individual. All right. Always like to take a little bit of time at the top of the hour here to let everybody know about the community that we've fostered around the technology that is TI. And all kind of starts off up here with the trading room, hosted by, you guessed it, Mr. Barry Anderson. Barry's going to open the doors about 30 minutes before every open. It is a great place to hang out. Doesn't matter what your skill level is, beginner, intermediate, advanced, traders from all walks in there. And it's just a great place to learn and engage. If you've done your homework and maybe shopped around some trading rooms on the web, you've probably come to the conclusion that most of them worth their salt are not free, and they're pretty penny to get into those things, whereas we make it available to you at no charge. You don't even necessarily have to be a subscriber to get in there and take advantage of the environment. So by all means, get on into the trading room. When it comes to the 5 p.m. Eastern webinar circuit, you get me and Steve on Mondays. Steve's going to take the steering wheel on Tuesdays. Andy Linloff's going to ride shotgun with him. Change it up just a little bit on Wednesdays and bring in our CEO and founder, Dan Merkin, along with Brad Williams, always entertaining with those two. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio on Thursday, and I ride shotgun with him. And of course, our ever popular Monday through Friday daily support session, kicking off at 12 p.m. Eastern and lasting for a full hour. So that's a great place to come and get any questions answered about Trade Ideas Pro. Could be something as simple as, hey, what filter setting do I need here? Or could be about back testing. Nothing is off the table. So the next slide I show you, I'll show you how to get there to the live support session. We host it on YouTube, trade-ideas.com down here in the bottom, /live. That's a static address. So once you get there, just bookmark it. Easy access moving forward. So once again, 12 p.m. to 1 p.m. Eastern, every Monday through Friday for the daily support session. As far as educational resources go, you're going to be hard pressed to find a better 4-part series, especially if you're brand new to the product. Beginner 101 and 201 are very indispensable. Can help you get over that learning curve a lot quicker than not watching these videos. And of course, these are hosted on our YouTube channel. So all you have to do is go over to YouTube, locate the Trade Ideas channel, give it a quick search for TI University, and these will come right up. So you can start and stop them at your leisure. Don't have to watch them all at once. But once again, especially if you're new to the product, for sure watch 101 and 201. When you've digested all of that information, well, it'd probably make good sense to go ahead and migrate on over to 301 and 401, get into the more advanced functionality of the product as well. All right, here we are at today's agenda. As always, I'm going to pass it off to Steve in just a minute here. We'll take a look at the overall market action, but it was just number go up again today. Kind of weird readings from my compare count. It wasn't a whole lot of help today. We'll go into further detail about that. Holley, I forgot to update the signal count, but we'll get to that in a minute. You'll notice I got some gaps in here simply because it was just kind of an non-event, small losing day for the AI. Couple of good trades on there to point out. We'll get to that shortly. And of course, always some quality opening range breaks. Got a couple of good examples to the long side and the short side, and I'll share those windows with you. And I've got something new for you guys that I think you'll find very interesting with some manipulation of the top 20 weighted symbols of the S&P. Pretty interesting little rabbit hole that led me down that idea today. So Steve, if you're ready, I'll just kick it on over to you and we can look at the overall market action before we dive into the other stuff.
Yes, and Jeff, that's a great point you make. Barry's room is better than 2 other paid rooms I was in when I first started trading. That's very relevant. That's a good comment. Thank you. All right, so let's get started on the market recap here. I've got some thoughts. You can see I've drawn a little orange line there. I mean, I could probably even extend that maybe back here even a little bit, but I'm just going to use these recent 3 or 4 tops to kind of really define the channel at the S&P by way of the SPY that we find ourselves in here. If you can see that orange line, that's the upper end of the channel. And for the most part, the lower end of the channel is give or take a few off of our 50-day moving average. And let me turn this one off. Thank you, goodbye. All right, but so today we pushed through and actually closed above my crudely drawn line, but we are in the upper end of our channel. I don't use Bollinger Bands, but I would guess to say we're in the upper end of the Bollinger Bands as well. And when we get up here, I just like to say the air is real thin. You know, sometimes, you know, there's my S&P 500 ticker. I think it's safe to say there's more red than green on here. I think a lot of people have been talking about the horrible breadth of the market, meaning that there's very few stocks driving the market higher. There's a lot, I think even the S&P 500, the majority, over 50%, are still under their own respective 50-day moving averages. So, you know, the indexes continue to defy us, but as we move higher into the upper ends of these channels, you got to be very cautious and be on the lookout for the rug pull or the vacuum or whatever you want to call it, the trap door. So I'm not really bullish on a lot of things right now. I'd kind of like to see how this resolves. One more thing I do want to do, and I haven't looked at it today, so let's look at it together, is look at possible divergence in the RSI. So if I add an RSI here to the chart, let's see what it shows us. And it kind of shows us what I thought. You see this upwards channel that I've already drawn, but when we kind of look at the peaks of the RSI, is a bit of a down stroke to it. So a little bit of a divergence up here. That's also a warning sign. It's not a reason to get short or do anything crazy, but it's just kind of a backdrop, again, that you got to be cautious up here. I'd rather be buying stocks when we're down here and holding the 50-day on green candles than I would be pushing the upper end of our channel here. Let's take a look at the Nasdaq and see. I don't think we're going to have as much divergence in the Nasdaq. No, we don't. We have kind of a different story over there. We have a, for the most part, pretty good breakout. And so the Nasdaq, the tech stocks, that is where the leadership seems to be. And there's just no way to deny that. So no bearish case, clean air up here above all of our moving averages. Techs and Nasdaq are certainly leading the way. IWM finally got out of its playground, meaning it couldn't get back above this 50-day moving average, and it gave back a little bit today, and that's to be expected after a pretty strong Friday. So keep an eye on that. If you're one who likes to play the OTC and the small cap stocks, they're starting to shape up and look a little better. That's the good news over there in small cap land. But other than that, that's about all I'm really noticing today, Jamie. Just be careful. Yeah, thin volume too, Dave, but the air is a little thin up here. And I just see a lot more stocks making daily lows than daily highs in my ticker. But I think Jamie's going to elaborate on this a little bit. Probably a good segue.
Yes, the air is thin, and who was pointing out that low volume? Yeah, Dave, correct. What we finish at on the SPY, 0.92. Okay, let me grab the screen back here. That would help. Jumping the gun a little bit here. Okay, hopefully you have eyes back on my screen now. So yeah, Dave, if we notice right up here, my little indice window, SPY finished at what, 0.92 on the relative scale, one being normal, so a little bit light. And let's, I'm gonna ask you guys a question real quick here before we dive into the content. let's say you shorted 45 positions today, and you just went short today. Let me see a guess, and you can just pop this into the questions panel. Where do you think that blotter would have ended up by the close today? Short 43 things in this up market. Up, down, sideways, flat. Okay, Gabriel says up. Yes, Dave, of course, it depends on what you shorted, right? But I'm doing a little testing in E-Trade, as you all might or might not be aware, trying to get Brokerage Plus up to specs here. So I was just like, well, let's see what happens if I run this strategy and I only go short. And it was a long strategy, but I've been like, you know what? Based on my compare count readings today, I'm going to go short. And after it was all said and done, and about 6 or 7 things stopped out, at the end of the day, I was exactly flat, right at 0. Okay, which is a little strange considering where we are in the market. Of course, I don't want to draw, I want to point. You know, when you look at a market like this and, popping those all-time highs again today, you think, well, let's say I shorted 50 things today, you would expect to have gotten, well, clobbered, especially since I was just doing the inverse of a long. So the reason I went off on that little tangent is Steve's comment about rarefied air. And we all know the Fed just keeps printing and printing and buying and printing. And, we're going to talk about that a little bit towards the end here. And, for those of you who might not be aware of this thing right here, this is the RSP, which is an equally weighted ETF for the S&P 500. The big tech stocks are heavily overweighted in the S&P. This is equally weighted. So you're going to notice this action on RSP, it might be something that you want to keep up in the future and just track it and watch the divergence between it and the S&P moving forward. Okay, so a little off topic there, but let's get back into the mix here. All right, so I updated the Holley signals here. Holley only had 8 signals today. Bit of a slow start there for a while. There was nothing, and then there was a few, and then boom, boom, boom. So the things that I typically like to point out are, was there any conservative versus moderate spread? Not really today. AFRM, a tiny, tiny bit. Not any trade arounds because those are typically associated with stop outs. If we look right here and we look at the stop outs, where's the aggressive profit? Past $100. I'm only risking $100 here. So not really any stop outs that by the time the day was out, we're still right there at the stop level. Okay, what we would typically look for are things that were in the green, would have been good trade around candidates, but those aren't really present today. And maybe one little add-on opportunity in the FIGS trade. So let's just take a look here. So you can see here, I've got my column sorted by moderate profit, and what we look for is a smaller number over here in conservative, bigger number in moderate profit. Nothing on the AMC trade, which we all got kind of tickled today that Holley shorted AMC and pulled a pretty good little profit on it today. About the same as FIGS today, one good long, one good short. There is a smidge of a spread here between conservative and moderate in the FIGS trade, but it's really not even worth showcasing because, well, $20. As far as a percentage difference, well, there is a big difference here, almost a 5x difference between what Holley booked in AFRM, risking $100 and basically flatting the trade, making $6, when she could have made a whopping $32.40. And I mean, not a whole lot to look at here, ladies and gents. The shaded area that you see up top here, this is the time spent in the trade. All we had to do, ignore the exit signal, and would have got a little bit more opportunity here before a dip back to flat, break even, and then popping right back up to these levels before the day was out. So had to mention that one because it technically is a little bit of spread there, but we're just not seeing big numbers today. Now, real quick here, let's just highlight through all the the risk modes, right? Risking $100 per trade. If we were in conservative mode, about a $41 loss. That doesn't include commission or slippage. Pretty much the same song and dance with moderate, just a little bit less, loss of $33. And even aggressive, if we were just buying and holding all of these things till the close today, we're still coming in right about the conservative level as well. So all in all for Holley today, just pretty much a non-event or a small losing day. Now, no trade rounds, a little bit of add-on opportunity in the FIGS trade. So let's take a look at that one. Smidge of spread. And here we are looking at the FIGS on a 5-minute intraday chart. We can see right down here, that's when Holley bought the stock or brought the signal to our attention at 40.58. Kind of hemmed and hawed, you know, took a little bit of a dip below the entry line here. Certainly didn't get anywhere close to our stop level before grinding back up over a nice little period of time here. Little secondary pattern playing out right here. Not a very pretty range break, not like the ones that we'll look at here shortly, which I like them nice and flat, but a range break nonetheless occurring right here. So this
Your
would have been a
charts
great.
are pretty, Jamie, with those colors. I like them.
Oh, so you're liking the color?
Yeah, I think I like that grading.
Okay. I thought you were going to tell me somebody in the questions panel was telling me they
No,
couldn't see them. I was
no,
thinking
that was
about
just
that
me.
before the webinar started. I'm like, I hope everybody can see these okay. Yeah.
No, they look great. They're snappy. I was just appreciating them over here.
Awesome. Awesome. So a great little ad opportunity here. Once again, not knocking in and out of the park, but 41.20. We peaked out at 42.20. So an extra point on the table here. If you got a little aggressive and played that opening range break after we already had the statistical viability that Holley brought us on the original signal. So that is just about it for Holley. We'll see what happens tomorrow. I mean, and typically Mondays, they're just not the best trading days for me, and typically not a whole lot happens on the algorithmic side either. It just seems like Tuesday, Wednesday, Thursday is when most of the action happens. As of late, we'll see if that holds true for the rest of the week. And of course, we are in that last week before September kicks in, so we'll see. Okay. Now, as with any market, there are always the opening range breaks. And, you know, those of you who attend on the regulars know that I like these patterns because of the simplicity of them. If you're new and you might be wondering what an orb is, that's opening range break, just the abbreviation for it. And it's quite a simple pattern, especially on the intraday level. So before I show you these plays today, I want to point out the windows that generated them are these guys down here. My turbo breaks up and down based around relative volume. These are very simple high-low tickers, and the sauce that I like about them gives them a little bit of oomph. It's a simple relative volume requirement in addition to some shares traded on the day. Had to have traded 100,000 shares already with a minimum relative volume of 3. Of course, this does not guarantee our trades are going to follow through if we find the timing to be appropriate, but it gives us a little bit more gas in the tank if that trade does start heading our way. So without further ado here, let me just get rid of the Holley panel that's blocking my way, and we'll take a look. All right, so let's do the not so pretty ones first. And of course, those would have been to the short side today because path of least resistance was definitely up. All right, did peel off a little bit at the end, but nothing to write home about. So a couple of good ones that came through today. POLY was not too shabby. Nice little gap up to start the day. Sellers are in control, boom, boom, boom. Then buyers and sellers become equal here. Notice the high was put in way up here. I'll just crack a line at that wick. Highs up here. And then we come all the way down here and put in the low right about here. All right. Then what happens? We go range bound. Grind back up, come back down, but then right here at this blue arrow, notice that lower range is busted, okay? And that's where we want to act on the stock. Now, coincidentally, stock can't go down, can't break that lower range, can it? Unless it punches a new low. So that's why I like to use new low for the downsides, new high for the upsides. So we see it breaking its low right here. We put that short on and we get some nice movement in our favor. Now notice the risk area right here. Why is this the risk area? So not including the entry candle, I look back at the higher 15-minute level, 5, 10, 15. That's my risk area. Reward area is the maximum move. So you can see we could have folded that risk area at least right about 2 times, maybe with a little bit of room left over. So that's a good risk to reward of 2R, all right? So not a bad short play for Poly. How was the volume in Poly today? Well, let's take a look at the single stock window. Not too shabby, finished the day at 3.22 on the relative scale. Volume on the smaller time frames was pretty consistent all day. So we had volume on our side and the pattern playing out happened to work nicely today. One more short to take a look at. Seemed like the P's were in play today. We had Poly, now we have Paya, okay? This one a little prettier, okay? Looking very similar to Poly. Gap up, big exhausting wick up there. Couldn't really keep it up there, snapped it back down. Highs up here, lows down here, becomes range bound for a little bit before pecking through right about the 9:15 level. So about 45 minutes into the open, we get the alert coming through, turbo breaks down. Hey, Pi is breaking lows. This is where we want to catch it. If we notice it way down here, that's too late, okay? We want to get it as close as we can to that break level so we don't chase it, okay? So risk level, same thing. If this is my entry candle, 5, 10, 15, risk area is up here, and we were left with a nice juicy reward area that we probably could have put that risk into, I'd say at least 3 times with some room left over, okay? Once again, trade did exactly what we hoped it would do based on this very simple opening range break to the downside. So not too shabby on the Paya. Now let's take a look at a couple of upside, which you're gonna notice a lot more opportunity in these trades. First on the list, and they just don't get hardly any prettier than what I'm about to show you guys here. Oh, and by the way, Paya, how did it finish on volume today? Not too shabby, about 2 on the relative scale. But definitely the winner of the day when it comes to range breaks was the ATIF, all right? Notice what it finished at as far as relative volume goes. I'll do this one a little backwards. Look at that relative volume number right there. And no, you're not seeing things. That's 416 times, all right? That's very large, okay? Now, notice a little bit of a gap here, but then, you know, we put in the high up here. Low was already put in. I need to adjust my line there, but this is my risk area. I just didn't add one for the low, but you see what I'm talking about. Highs up here, lows here. We get this nice, very subtle sideways action here. I mean, consolidation, if you want to call it that. Always like to just refer to it as, you know what? Buyers and sellers were equal during this time period. But this is our key factor right up here. If it comes back up here and breaks that level, be a nice trade to take a pop at, okay? Risk area right here, clearly defined. And boy, this thing just, it went, and it went in a big way. Entry level, approximately 337-ish. And this little guy topped out 560-ish, okay? So as far as a percentage move, gonna be hard pressed to find anything better than this. And interestingly enough, came all the way back down. So if you didn't take the cookies while the plate was going around, or if you didn't get that chair in musical chairs, well, if you got greedy on this one, you were left holding the bag. Probably not too bad, but huge profit potential in this one. Not really sure how many times we could fit that risk level in there, but it was pretty big. So a beautiful, simple opening range break setup with low risk on the ATIF today on something that, you know, you'd be hard pressed to find anything that did more volume than ATIF today. Yeah, and by you, I see your question there. The opening range is going to be broken regardless of what time frame you're looking at. I just kind of have started leaning more towards 5-minute candles here lately, giving me more candles to look at. Okay, notice if we did change this to 15 minutes, all the crucial elements are the same. We just have less bars to examine here, but that's still a very clean 15-minute opening range break there. So 15, we just have less bars, but especially if you're trading in the first 30 minutes, you need to have something to look at. You'd only have 2 15-minute candles or 6 5-minute candles. So your intraday preference is up to you, but the price levels on the breaks are always going to be the same. So hopefully that makes sense to you. All right, so the next long one I had was VALN. Very pretty as well, just not near as big a percentage move. But when it comes to continuity of this consolidation area, pretty good. All right, gap up, sideways action. High was originally put in 9:30. Took about another hour and 15 minutes. And once again, these are the 15-minute candles. But boom, this is where the break occurs right here, about 46.48. Risk level is down here. Keep in mind, we only have to look at one candle since this is 15-minute candles, prior 15-minute period, very tiny risk area right here in this little trench. All right, right here. That's our risk area. This thing did exactly what we hope a stock would do when we go long, just boom, straight up 46.56. This guy topping out 49, or excuse me, right about the $59 level. Peeled back, not quite as much as the ATIF, but peeled back nonetheless, but some really nice profit opportunity in there. Very nice risk to reward ratio. This little guy finishing 26.72, nothing compared to ATIF, but hey, enough to get the job done. And I see people asking for the windows. Don't worry, I've already got a document prepared. When we're at the end of the webinar here, I'll drop the cloud links for both of my windows in the chat panel, along with the one we're just about to talk about. Okay, so that's about it for the orbs. And of course, there were several other ones too. Those are just had time to showcase 2 of the long and 2 of the short. I'll make sure you guys have those windows before we're done here. All right, now we're gonna move on to this little guy right here. Kind of circling back around to what I was chattering about on the RSP. Okay, here is an ETF where it equally weights all of the S&P 500 components, okay? Very different than the S&P 500 where, Apple has some ridiculous weighting, all the big tech stocks have some ridiculous weighting, so the case can be made that it's really just all about the FANG stocks. The S&P is gonna move to the whims of the FANG stocks, where this is more of an equal weighting. I was back channeling with a couple people today, thought I had some good ideas, and then I realized, well, all the components are the same. The S&P 500 is the S&P 500. It's the weighting that makes the difference between this guy and the S&P or the SPY ETF. And since we don't really track weighting here, I was like, well, good idea, but can't really do anything with it. But then I thought to myself, okay, if we're going to be focusing on the SPY all the time, what would happen if I took the top 20 weightings of the SPY and ran those through some analysis, okay? So came up with something pretty interesting. And in the end, it was so simple, okay? And simple is typically better. So let's talk about that. Now, this is the finished version right here. Top 20 weighted SPY, PPP, and I have to give Steve credit for the name here. Print, pump, and purchase, okay? Because everybody knows the Fed just printing money, print, printed more money in 2020 than in history by a long shot, okay? Well, ladies and gentlemen, what's the Fed doing with all that money? Well,
Pump, print, purchase.
Yep. They're purchasing some of these things, and then the market just keeps going up, and they print more and they buy more. So thus the name print, pump, and purchase. So what we got here is we have a simple strategy. And what I'm going to do here is give you a peek into the configuration string. So number one, keep in mind this window's only looking at the top 20 weighted stocks in the S&P 500. Okay, very short list. And look how many filters I have in play. I have a cap of, we'll just round that up to 160 bucks. In the S&P, can't be up more than 0.39% since the previous close. S&P was down no more than 0.7% since the previous close, or the S&P was flat. Okay, so it's got to be between these two parameters here. All right. Now, how did I arrive at these numbers here? Well, I just did some simple optimization. Let me walk you through it. What we're going to do here is duplicate the window. You know, you can make back testing really arduous and difficult, and sometimes it can be crazy simple. And this is a case for that. So what we're going to do here is we're going to just get rid of the 1, 2, 3 filter settings that I had in there. So now all we're doing is we're looking at that list of the top 20 weighted stocks of the S&P. Now what I'm going to do is bring up the back test. Now, start at the open, let it run all day. Of course, most of them are being found close to the open. 90 minutes. Okay, originally I just ran this. I'm like, let's try to find something for an hour-long hold. But after I kind of ran the numbers and kind of played with this, I found that 90 was the optimum hold time. But I just want to give you guys an idea of how the idea flow worked here. Not really using any risk management here because this is an amount of trades that, you know, it's not spitting out a ton, okay? So if you do decide to take a trade from here and you're in the chair, like I say all the time, the only time I put in a stop loss is if I'm not gonna be in front of the computer, all right? And that's the way I do it. You might be different, but just kind of giving you some background there. We're doing a 40-day back test here. So the first run looked something like this. Yeah, good one, Dave. The other P word. And Jim, I see your question about the config on the turbo ups. Sure, I'll bang through those here in just a second. Okay, so this was the first result that I got here. Now, that's okay because on a first scan, typically have way more trades than you need, and that's not necessarily a bad thing. And, you know, just nothing to write home about. A lot of trades, average losers bigger than the average winner. We do have over a 50% win rate here though, okay? But definitely not ready for prime time. So the first thing I noticed were these kind of huge swings down here. And I thought to myself, you know what? In the top 20, I know Berkshire Hathaway's in there, BRK.A. Yeah, it's probably not something that I want in there. So I just clicked on over to the optimization tab, went to symbol. Sure enough, there's the culprit, okay? Berk B, you've got Apple in here, up in the trees. So actually price, but just want to give you an example of what's showing up in there. So price, of course, intervals are at 500. That does me no good. Let's shrink it down a little bit. All right, so first I just went, show me it in clips of 10. And then I start noticing down here, hardly any trades in those super expensive stocks. Who wants to trade a $3,000 stock anyway? Some of these other big price stocks, they're just, that's not where all the action was, okay? So then I just kept shrinking down the increments. And I thought to myself, well, you know, look what we got going on here in the 35 to, let's just call it 165 area. So that was my first tip off, okay? So that's when I came in there and I just installed the max price filter. I think I ended up after some hemming and hawing right there at 159.99. So tell you what, I should have did that right then and there. Hopefully it won't take long to zip back through here though. And while that's going, to your point, Jim, your question, configure in the turbo up is right here. And it's the same for the downside version, okay? Same EPS filters in there to get rid of the ETFs, max price 150, relative volume of 3, and 100,000 shares traded. But you'll have these cloud links before we're done here. All right, so get back over here to the optimization. We go price. So 159.99 is where I capped it. And keep in mind, you can make that change right from within the optimization panel. We just give it a right click. And say set max of 159.99. Okay, so after I did that, we just go back in here and we rerun the back test.
Gabriel says you're like the Bob Ross of back testing, and I said happy little trees.
Happy little trees. Yeah, that guy's got quite the interesting backstory.
Happy little trades, excuse me.
Happy little trades,
Yeah.
Okay, so quite a bit different just from putting that cap on the max price. We go from 776 trades down to 151, dramatically increase the winning percentage here. We've even got a spread now between average winner and loser. How are things looking over here? Not too shabby. How's the daily looking? Let's see here. Okay, well, there's hope. But since we're talking about the S&P, wouldn't it make sense to go in there and go, I wonder if how much the S&P is up or down for the session thus far would make any difference. So that's where I went next. And I came down here to S&P change for today. And I think I shrunk it down to increments of 0.1%. Okay. And obviously, who cares about these? There's hardly any trades in there, but things get really interesting when we get down here. Matter of fact, this whole area here is pretty interesting. So let's cheat a little bit. Can't remember if I kept shrinking it down, but we're going to be close. Minus 0.7 and 0.39. Notice here, minus 0.7. And I guess I need to go 0.05. Minus 0.7. And am I at 0.39 over here? I don't know why it's showing up. Okay, well, I don't know exactly what I did differently there, but you can definitely see here is where I started, and somewhere between here and here is 0.39, okay? I'm just curious. 0.7. Okay, I came all the way down here. I went minus 0.7, I'll take all of this, okay? So I just did this, minus 0.7, and 0.39 as a max. And the reason being, I'm willing to suffer through this to capture this. So at some points in time, these little blips of red are insignificant, okay? So now that's what we have. And ladies and gentlemen, those are the only two optimizations that I had to do because we're looking at a custom list. By the way, before I forget, I would like to point out the following feature. Okay, notice that when I go to symbol list, only the following list, SPY top 20 weighted. When I give you guys this cloud link and you pull it up, you're automatically going to be pointed to that list. You don't have to build a list and point to it. It should come up automatically. So all you have to do is pull it up, run the back test, make sure everything looks good, and then you'll have it without having to fumble around with a list. So let's see if I hit the mark here. Oops, wrong option, back test. Okay, keep in mind we're still in the 60-minute hold time. And while I'm doing that one, I'll run this one simultaneously just to make sure I didn't screw anything up. Oh, we're looking good. Okay, not too shabby thus far. Okay, 134 trades over a 40-day period. That's good because we're not overloaded, okay? But we have just enough trades coming through. Now, nice on the equity curve, of course, I'm assuming in a zero commission environment, allocating $5,000 per trade. It's just enough equity, a little over 5,000 on the busiest day. If we look at the buying power here, you'll see it kind of tops out at 20 because we're only looking at that universe of stocks. So not a whole lot of buying power needed. 5,000 covers that up. Some pretty decent expectations on the monthly and the yearly. Not bad here on the daily, looking at 40 days, right? Winning days in a row, we got 11. 2 losing days in a row, max, take that. And these are the top 20 weighted S&P stocks, so you know they're going to be liquid, and you know they're not going to be these thinly traded things where you can't get a fill. All right, so not looking too shabby. Now, what I did is I started running different hold times. Okay, go to 2 hours, go to 30 minutes. Where is the sweet spot? And from what I found, the sweet spot is about an hour and a half. Okay, so what happened here? We had 13-cent spread on the original 60-minute hold time, but we had a higher winning percentage. We stretched the hold time out to 90 minutes. We even tack a little bit onto the profit factor. We dropped just a little bit on the win percentage, but we tacked on, let's see, 13. We tacked on quite a bit in the spread between average winner and loser. Looking over here at the daily now, I mean, we dropped to only 8 winning days in a row, but still, we're still sticking to 2 losing days in a row max. But look what happened to our average or our biggest winning day and our biggest losing day. Over here, in the 60-minute hold time, our biggest winning day wasn't even double what our biggest losing day was. Now we're getting that down here. We're giving up a little bit on the streak, but that's okay in my opinion. But of course, hey, run it however you want, right? Only 8 winning days in a row, still sticking to 2 losing days in a row, but our biggest winning day was over 2x our biggest losing day. So if we just take a little peek here, you know, as I was saying earlier, what you don't have to worry about is these things being too thinly traded. If we go take a peek and we look at some of the names these things are spitting out, well, you got BAC, Apple, PG, right? Names that everybody knows, right? Apple, BAC, JPM, PG. So liquid stocks, interesting theory. Hey, if we're going to be paying attention to the S&P, how about the 20 most heavily weighted? And you know what? That's just a number I pulled out of the air. 10's too little. How about 20? Well, guess what? This might hold up for the top 50 or the top 60 or the top 100, but these results are very encouraging. So you can bet your bottom dollar, I'm going to increase the universe. I'm going to shrink the universe. You know, tomorrow I'll probably start on a scan that says, okay, I'm going to find the lowest weighted 20 And are those still good to go long, or do those work out better on the short side? Maybe find a companion to this for going short. So pretty good little idea that I stumbled on today about the weighting. First idea didn't work, but it led me down the path of what you see here. All right, just catching up on questions here. Yeah, so Jim, originally we were talking about the RSP, and I back channeled Andy. I'm like, hey Andy, why don't we have an RSP channel? He's like, well, I like the idea, but the components are all the same. And I'm like, yep, you're right, because we don't track weightings of of the indexes, right? Which, hey, maybe that'll be something we start tracking if we think there's some value there. But that's what originally led me down this path. Is the first idea. I even told Steve, I'm like, yeah, my idea is garbage because it's the same components and we don't track weighting. But then I got the idea for this. Okay, well, let's deal with things that are the most heavily weighted, and then tomorrow I'll probably go down the rabbit hole on the things that are the least weighted, right? And see where that takes me. But the added benefit is these are highly liquid stocks. Got to say, for a simple back test and simple filters, some encouraging results. So we'll
Hey, can I
see.
qualify something? Because I've been talking with Baiju and Gabriel about, the closing candles into the 10-minute SMA, and just looking right there at FSP is a perfect example. Look at that very first candle that closed below, right above the 5, and once it did, it never got back above. And so usually that's the one candle I call the fire escape candle. You
You're
get up and
talking
walk
about
to
the 10
the
period here
yeah.
on the intraday?
On the intraday, yeah, that first
Yep.
candle right above the 5 there, the red candle that closed
Mhm.
below the 10 period, that pretty much signaled that, the buyers were probably done, and it never really got back above that line. So using that first signal candle that closes below has oftentimes saved me a lot of headache.
Right, so you're talking about this guy right here?
No, above the, in the 5, move over 6 candles, that one
This
right
guy?
there.
Okay.
That the candle closed below the 10, right? That's a 10 period SMA,
Right,
right?
but didn't this one too?
One more to the right.
I can't draw as good as Steve. But
That's
you're
okay.
talking
But
about
I
right
just wanted
here.
to clarify that because I was going back and forth with two people and I kind of combined the conversation.
Yeah. Of course. I mean, Steve can tell you, as soon as those candles close below the 10, a lot of the times that upside momentum is finito. All right, so before I forget here, let me grab these links and drop them into the chat for you guys. Okay, so these should all come through at once. And there you have it. Turbo up, turbo down, and then the optimized version of the print, pump, and purchase alert window. And as I said earlier, you don't have to worry about compiling a list. Once you load that cloud link up, you should see it auto point to that list. All you have to do from that point on is have a little fun with it. All right, ladies and gentlemen, I want to thank all of you for attending. We know your time is important and always appreciate you taking the time to hear what we have to say. So Scott, if you're ready to walk us on out of here,
Hey, before
it
we
is
do
that
that, let's
time.
make an announcement about the new webinar schedule. I'll just
You're
go ahead and
right.
say it.
You're right.
Monday, Wednesday is going to be the new webinar schedule this week. Next week, we will go to the Tuesday, Thursday. So instead of doing Monday through Thursday every week, we're kind of splitting it up for a less is more approach. So I'll see you guys not tomorrow, but next Tuesday and also next Thursday, Jamie and Andy. So just remember that we're doing alternating weeks now, Monday, Wednesday, and the following week, Tuesday, Thursday, same format, same people.
Yes, indeed. Changing it up a little bit. All righty.
Yeah.
There
So a couple
you
items on the way out. Everyone should make sure they've got that newer strategy indicators ebook that we released a month or two ago. Just go to tradeideas.com/strategy, grab it. It's free. Written by our director of software development who created Holley and all that good stuff like back testing module. Also got a new code for this month. Holley Rocks will save you 15% off any upgrade or new subscription. So do take advantage of that if you want to upgrade from standard to premium or just start a new subscription with Trade Ideas. And if you have any questions, send your emails to info@tradeideas.com. Goes into our help desk software. You can find Steve on Twitter at TISteveG and Jamie Hodge is at QuantBot. Also look for @TradeIdeas, and on Facebook we are Trade Ideas Pro. Thank you all. The recording will be up later on tonight or tomorrow. You get an email reminder from GoToWebinar tomorrow with a link to the playlist where you can find it. So thanks, Jamie and Steve. Thank you all. Have a good one.
Thanks, everybody. We'll see you tomorrow.
See you next time.